IRS e-file compliance has a couple of easy-to-miss traps. First, you can't transmit an e-filed return until you've received all required forms W-2 from the taxpayer. Second, you can't market Paystub-only filing. On the EA exam, they love testing these as bright-line rules because they're simple, but the consequences are serious for an e-file provider. Let's lock in the W-2 receipt rule. As an authorized e-file provider, you're prohibited from submitting an electronic return before you receive all forms W-2. That means a client saying, "Just use my last pay statement," is not enough. The IRS treats that as missing required information returns. Exam tip: if you see "File now, W-2 later," it's a red flag. So, when are pay stubs ever allowed? Only in the Form 4852 situation. Form 4852 is a substitute for Form W-2, and it's used when the taxpayer can't get a W-2 in time. But it's not a shortcut. The taxpayer must first attempt to obtain the W-2 from the employer. Form 4852 is the last resort, not the first plan. Here's the exam-friendly comparison. Using only a pay stub to file early is prohibited. Using Form 4852 after trying to get the W-2 is permitted, and that's the only time pay stub info is acceptable. If a question asks what makes it okay, the magic words are "attempted to obtain the W-2" and "last resort." Now advertising. Once you're accepted into IRS e-file, you may call yourself an authorized IRS e-file provider, but you can't use misleading advertising tied to e-file, especially refund timing promises. On the EA exam, watch for ads like "guaranteed refund in 24 hours." That's exactly the kind of claim the rules are trying to prevent. Logos and seals are another compliance hotspot. You can't use the regular IRS logo, the eagle symbol, or IRS insignia in your advertising. You also can't use treasury seals like FMS or anything that implies a special relationship with the IRS. You may use the IRS e-file logo, but you can't combine it with the IRS eagle, the word federal, or other elements that suggest endorsement. Last, record retention for advertising. If you advertise using radio, TV, internet, signage, any method, and the ad includes fee information or a fee schedule, you must keep a copy and provide it to the IRS on request. And you keep those fee-based ads for at least 36 months from the last time you used or transmitted them. That 36-month number is very testable. Marisol is an enrolled agent who offers refund anticipation loans along with tax prep. Her client, Derek, requests a refund anticipation loan. The question is, the contract for a refund anticipation loan is between which parties? Is it between Marisol and Derek? Marisol and the IRS? Derek and the lender? Or Derek and the IRS? Think about it. The contract is between Derek and the lender offering the loan. A refund anticipation loan is a third-party loan based on the expected refund, not an IRS product. A tempting wrong answer is Marisol and Derek because she's the one offering it in her office, but she's typically facilitating, not lending the money herself. The IRS's e-file rules prohibit a tax preparer from doing which of the following? Charging a separate e-file fee, filing using a client's last pay stub when the W-2 hasn't arrived, telling the IRS to direct deposit a refund to the client's bank account, or charging prep fees based on forms prepared. Think about it. The prohibited action is filing using the client's last pay stub when the Form W-2 hasn't been received. E-file providers can't transmit before receiving required W-2 information. The tempting trap is thinking pay stubs are okay if they look accurate, but the only workaround is Form 4852, and only as a last resort after trying to get the W-2.